Good afternoon, everyone, and welcome to the latest in our series of Professional Advisors Working Lunches, today brought to you courtesy of our partner, Baillie Gifford. I'm Hope Williams-Smith, editor of Professional Advisor, and I will be your host for the next hour. Before we get going with today's session, let me quickly run you through the usual housekeeping. So your microphones and cameras are currently switched off, and we would be most grateful if you could please keep them that way, just to ensure that there's no background noise and so that our speakers can be heard nice and clearly. I should also inform you that this session is being recorded, and we will send you a link of that by tomorrow, so do feel free to share this with your colleagues. And as usual, today's working lunch will qualify for 1 hour of CPD, and we'll be sending out that proof of attendance along with the link to the recording to arrive in your inboxes tomorrow. Now, times are changing. Headlines are dominated by geopolitical tensions, the pace of climate change, healthcare systems under pressure, and social inequalities. Against this backdrop, how can equity investors help address these challenges while still making attractive long-term investment returns? Furthermore, how can you measure whether investments are helping to address societal and environmental challenges? Well, to address those questions and any that you wish to ask her, I'm delighted to be joined by Rosie Rankin, who is Client Service Director at Baillie Gifford with specific responsibility for their Positive Change Fund. Over the next hour with Rosie, we'll learn how the team is managing the portfolio through this really challenging period, and Rosie will also explore how investing for positive change can mean that profits and purpose really go hand in hand. As I said, do feel free to put any and all of your questions to Rosie for the next hour using the chat function, which you will find in the bottom right-hand corner of the screen. If you wish to stay anonymous, then simply select my name from the drop-down list in the chat box before you type your question. So just before I hand over to Rosie, let me quickly run you through our learning objectives for today. So by the end of this session, you should be able to understand how critical global challenges can be addressed in an equity portfolio context, understand how companies can contribute towards solving these challenges alongside providing attractive investment returns, and finally, understand how you can monitor and report on the contribution that companies are making to address these challenges. So with the CPD all covered, I'm delighted to hand over to Baillie Gifford's Rosie Rankin.
Thank you, Hope, and thank you everyone for taking the time over your lunch hour to spend it hearing a bit more about positive change. So let me share my screen and hopefully you will see the presentation there. I was going to start off today by sharing with you, if I can get my screen to work, quite an eclectic group of people, which you can hopefully see in front of you now. So we have Adele headlining Glastonbury. We have Mo Farah clutching one of the gold medals that he won at the Rio Olympics. And we have our one-time Prime Minister, Theresa May, shortly after she was elected, meeting Barack Obama. Now, I was actually going to ask you a question. So perhaps our first poll question, please. Can you recollect when these events happened? And here we go. So in what year did these events take place? Was it 2016, 2014, or 2012? And as a reminder, the events we're talking about is Adele headlining Glastonbury, Mo Farah winning 2 gold medals at the Rio Olympics, and Theresa May becoming Prime Minister. So yes, pleased to say the majority of you are correct. It was 2016. And I don't know about you, but to me, none of these events seem particularly long ago. In many ways, 7 years passes in no time at all. However, if we look 7 years to the future, 2030 seems some time away. And it is certainly impossible to predict what images we'd be looking at then. I can't tell you who will be headlining Glastonbury in 2030. I don't know who will have won the 5,000 and 10,000 metres at the Los Angeles Olympics in 2028. And most impossible of all, I certainly can't tell you who will be British Prime Minister. We've had 5 since the start of 2016, so really it's anybody's guess. Now, these may be frivolous examples, but hopefully they illustrate a point. And as we participate in this discussion this lunchtime, we're all thinking about the future, how we can invest in order to meet our clients' goals. But the world is really unpredictable, and perhaps uncertainty is the only certainty there is. We're certainly surrounded by very complex challenges. I don't know about you, but whenever I'm reading or watching the news, it can sometimes become quite overwhelming. From the war in Ukraine to challenges around persistent poverty, the cost of living crisis, resource scarcity, it can all feel very depressing. But I think the good news is that we can do something about some of these challenges, and doing something about it does provide investment opportunity. Perhaps we can dive a bit deeper now, not into what we don't know, but in terms of what we do know. And I wanted to share with you this diagram, which is actually one of my favorite. It's in terms of illustrating, looking out over the next 50 to 75 years, what we can expect in terms of demographics and the shape of the world's population. You'll see from the diagram in front of you that across the bottom axis, we have men's population on one side, women's on the other, and the years. And then up the vertical axis, we have the age distribution of that population. What this shows us, if you look at the dark blue triangle in the center of the diagram, that's the global population in 1950. As you can see, there's a very kind of broad base to that pyramid of younger people in the world's population, and relatively few of the world's population over the age of 60. If you fast forward that out to 2050, which is the first of the kind of pale yellow shapes, you can see 2 striking things. One is the overall number of people has dramatically expanded, but also the age distribution has shifted. There's no longer a small proportion of older people in the world. It is much more evenly spread. So what does this mean for trends that we can think about with a high degree of certainty? First of all, and it sounds very obvious, the global population is rising. When I was born in the 1970s, the global population was 4 billion. In November last year, it hit 8 billion. That is a doubling in a very short period of time. Secondly, the age distribution is changing. The median average age has increased by 50% since 1950. And of course, that changing age distribution has huge implications for global healthcare systems. People are living longer, but they're not necessarily healthier. Take India, for example. This year, it became one of the world's most populous countries. And as its population ages, it has seen a sad and steep rise in non-communicable diseases, such as cancer, diabetes, dementia, and heart diseases. And of course, the rise in these non-communicable diseases, as well as individual tragedies, is putting tremendous strain on the Indian healthcare system. Also, it seems very obvious, but we need to produce enough food to feed our growing population in ways that doesn't increase our impact on the environment. Otherwise, we'll exacerbate the climate crisis. And of course, over the summer months, we've all seen the frightening effects of our warming climate. Little did Adele or Mo Farah or Theresa May back in 2016 realised that the next 7 years would be the warmest on record. And then climate change brings us to biodiversity. In part to the expectation, sorry, I've muddled up in terms of, I was going to talk about, first of all, about water scarcity and thinking about, by the time we get to 2025, around 2/3 of the world's population will be facing water scarcity, which is all linked in to biodiversity, with David Attenborough predicting that we could be looking at the 6th mass extinction event. Now, all of these are quite sobering thoughts, but within positive change, we do want to be optimistic, and we want to believe that human ingenuity can help us address some of these challenges. And how on earth do we even think about these challenges in the context of an investment portfolio? Now, of course, when you're thinking about investment portfolios, one tried and tested method of thinking about responsible investing is by avoiding investments in companies, sectors, or industries that are causing harm, such as fossil fuels or tobacco or munitions. Now, of course, this can help mitigate financial risk and help align investments with values. However, there is a limitation to this approach. I think really addressing some of the world's most pressing challenges through exclusion is hard. What exclusions would you put on a portfolio, for example, in order to improve access to transformative healthcare? Or what would you not invest in order to encourage agricultural innovation? So rather than exclusion, impact investing seeks to invest in holdings which have a real goal of generating social and environmental positive impact alongside financial returns. And looking at impact investing, it is these dual objectives of measurable societal impact and financial return that are important. And of course, all of us on this call today need to think about investment returns as well as societal good. We require a good rate of investment return to meet our clients' goals. So it's important to note that impact investing is not philanthropy. We believe that if companies are providing goods and services which really help address global challenges, then they should see rising demand for those products. They'll benefit from loyal customers and motivated employees who are seeking jobs with purpose. So we definitely think that by investing in exceptional companies that are providing solutions to global challenges, investors can capitalize on the transformation to a more sustainable and inclusive world. As Hope said right at the start, we truly believe purpose complements profit. And so in summary, impact investing is that kind of dual objectives of a social and environmental return plus a financial return. And for us, both objectives are equally important. So how do we think about this in a portfolio context? Well, positive change has two equally important objectives: to deliver attractive investment returns, which we define as 2% per annum ahead of the MSCI ACWI net of fees over rolling 5-year periods, and to contribute towards a more sustainable and inclusive world. And to be clear, every company that goes into the portfolio has to meet both objectives. If we see a company that's doing something very beneficial for the world, but we can't see its ability to generate attractive investment returns, we wouldn't invest, and vice versa. Now, at Baillie Gifford, we very much enjoy running concentrated portfolios, and positive change is no exception. The stock range is 25 to 50. There are typically about 35 companies in the portfolio, and you can expect the portfolio to look very different to the index. Active share is high, usually 97% or above, and we're very long term. We aim to own companies for 5 to 10 years or longer. This is very consistent with our investment objectives, but also consistent with our impact objectives. Sadly, we won't solve challenges like climate change or persistent poverty over the next quarter or the next 12 months. We truly believe you have to have a multi-year time horizon. Now, when we're thinking about the world, there are multiple challenges that need to be addressed. And this brings me to my second poll. So Andrew, if we could have the second poll up, because what I was really intrigued about is really what challenges do your clients mention and care about in relation to their portfolio? Do your clients care about climate? Are there concerns more on broader environmental topics? Perhaps it is water use or biodiversity. It might be more social topics that are on your clients' minds, whether they are thinking about social inequality or global poverty. Or perhaps your clients don't really mention at all the challenges in the context of their investments. So very intrigued to find out what's on your clients' minds. That is so interesting that there is such a spread in terms of the challenges that your clients are thinking about. And actually, in a way that reflects how we're thinking about the challenges within positive change. We have 4 impact themes within the portfolio. So we have social inclusion and education, environment and resource needs, healthcare and quality of life, and base of the pyramid. Now, base of the pyramid is looking for companies who are helping the very poorest in the world. So the 4 billion people who are on less than $3,000 a year. And of course, these themes aren't discrete and isolated themes. There is an interplay within these themes. They're interconnected. And it's probably important to say that we don't use the themes for asset allocation. There is no intention to have 25% of the portfolio in each of the themes. Instead, we use them to guide our research agenda and find ideas for the portfolio. And that's where I wanted to move to next. I wanted to share some of the ideas that we currently have within the portfolio as a way of really illustrating how we're thinking about meeting some of these challenges. So first of all, with social inclusion and education, Now, this brightly coloured owl Duo may be familiar to some of you if you are users of the Duolingo language learning app. I know I am. It's, for those of you who haven't encountered it, it's an app that you can download onto your smartphone, and the app allows you free access to language lessons. They're short lessons, engaging lessons, very interactive. And it provides a means for nearly 60 million people in the world to learn a language. Now, I'm using it to brush up on my very rusty schoolgirl German. But our impact case isn't predicated on people like me learning a language for fun. It's predicated on the large number of people for whom learning a language is transformative. So particularly for those in lower and middle income countries, learning a language such as English can open up a host of educational or employment opportunities. So the ability for these people to have access to high quality language learning for free is transformational. Now, you may be thinking, yes, but how does this meet our investment objective if the app is free? Well, Duolingo make money in 3 ways. First of all, out of their 60 million users, under 10% of those choose to pay to access the app. That way you can get some additional features, but also you don't then see the advertising. And advertising is the second way that Duolingo make revenue. They attract advertising revenue. And of course, the more users Duolingo have, the more advertising revenue they're able to collect. And thirdly, for English, they offer paid certification so that once you get to a certain level, you can choose to pay to sit a test which demonstrates your competency in English, and that certification is recognised by a range of different educational institutes, for example. So here we can see the investment and impact case are very closely intertwined. Now, Duolingo is a relatively new company, it's a relatively young company, and is in complete contrast to the second company I was going to talk about, which is Deere, the manufacturer of agricultural equipment, which we hold within our environment and resource needs theme. And here you can see a picture of one of our investment managers, Lee Chan, alongside one of our impact analysts, Punit Desai, as they visit Deere's research facilities in the US. The reason that we're attracted to Deere is that they are world leaders in precision agriculture. So that is the technology that incorporates cameras and sensors into agricultural machinery to make the application of chemicals and pesticides much more precise and efficient. Now that can reduce the use of chemicals by about 80%. Now, as well as the environmental benefits of less chemical usage, that obviously is attractive for farmers as it reduces their costs whilst actually increasing their yields. So we can see why the use of precision agriculture is growing strongly. And from an investment perspective, it's interesting for Deere because the margins of precision agriculture are much higher than those of a traditional agricultural machinery operator, because of course it changes the economics from just being a manufacturer of machines to being a provider of software. So again, a company where we feel that the investment and impact case very much go hand in hand. That brings me on to our third theme, healthcare and quality of life. Now here I wanted to share with you the example of Dexcom, which is a company which manufactures continuous glucose monitoring systems for diabetics. Now, sadly, as I mentioned at the start, as the world's population ages, we're seeing increasing incidence of diabetes. So sadly, it is a growing market. And Dexcom provides a treatment which allows continuous readings of a patient's glucose levels to be sent to their smartphone or to the smartphones of their carers. So allows much more efficient management of the condition. Over our period of ownership, and we've owned the company for over 6.5 years since Positive Change started, we've seen their patient population significantly expand, which has allowed them to help more people manage their condition effectively, and has obviously had the associated benefits of increasing revenues and earnings for the company. So again, a kind of good example of where share price and impact have gone hand in hand. And then finally, base of the pyramid. Now, base of the pyramid is a really tricky theme for us to address within our portfolio, because of course we want to invest in companies that are helping the very poorest in the world, but we want to invest in companies that also have the ability to generate an attractive investment return. Our most recent investment in this theme is a company called Remitly. For those of you who live in London, you may have seen recently Remitly advertising on the Underground. What they are is it's a company which facilitates remittances. So their key customer base are immigrants in countries sending money back to their home countries, which are often lower and middle income countries. I was actually going to do a bit of a deeper dive into Remitly to share with you actually how do we analyse the impact of all these companies in the portfolio. I've shared with you some very different examples, from manufacturers of machines to language learning apps to medical device manufacturers. How do we assess the impact of these companies? We do so using the framework that you see in front of you. And for every single company in the portfolio, no matter what sector or industry or challenge they're tackling, we use the framework that you see in front of you now. So we look at 3 factors. We look at product impact, we look at intent, and we look at business practices. So first of all, perhaps looking at product impact, and we'll do this in relation to Remitly, the remittance company. So remittances are a huge driver of change. The amount of remittances that are sent each year in the world is around about $650 billion. That is a huge amount of money. That is more than is given by government and overseas aid. And the recipients of those remittance funds typically use the money for food and shelter and other basic needs. But we also see about 25% of remittances being used for things like education costs. And that's a really good illustration of how the receipt of remittances can really help to drive change. Remitly's products are very geared up for recipients in low-income countries. Their fees are cheaper than established competitors such as Western Union. They aim to be very transparent and quick in remitting money. And crucially, the recipients of the money don't have to have a bank account to receive that money. They have, Remitly have a network of corner shops or banks or supermarkets where recipients can go in and collect those funds. So it's a product that's very geared up for those in lower income countries. And of course, receiving that money can very much help improve people's prospects and also improve their resiliency to financial shocks. We then look at intent, and here we look at the intent of the management team, because we really want to understand how committed are this management team to really driving change. And we've been extremely impressed with Remittly's unrelenting focus on really helping immigrants and their family networks. And everything about their product design and their ambitions around the business are geared towards meeting the challenges that immigrants face. And in terms of business practices, this is much more of a conventional ESG analysis. Here we're looking at a company's attitude towards the environment, how they treat stakeholders, and how the company is governed. And I think this is interesting because we like to see good business practices with a company. And actually we rate Remitly relatively highly on business practices. But that is not why a company gets into the positive change portfolio. This is not a portfolio of companies with perfect business practices. It's a portfolio of companies with compelling product impact. And I think that's a really important point to mention, because unless we see that link between a company's products and all of those challenges that I mentioned at the start, then it wouldn't be a company that we'd want to invest in for this portfolio. And here is the portfolio in full. A few points I'll make. One is, as you'll see, we don't use the themes for asset allocation. You'll see that base of the pyramid is a much smaller theme for us in terms of exposure, not because it's less important to us, but because it is much harder to find ideas there. And also, you'll hopefully recognise a range of names that may be familiar to you, kind of very large and long-established companies, whether that's Deere, or one of our recent new buys is Daikin. It's a over 100-year-old Japanese company. And also newer, innovative companies, whether that's companies such as Alnylam Pharmaceuticals, an innovative biotech company, or New Holdings, which is a Brazilian digital bank, now actually the largest digital bank in the world. So a real range of different types of companies addressing a whole range of different challenges. I was going to move on next to a topic really close to my heart, and that is on measuring and reporting. I've been delighted over the last 5-6 years to see a real emergence and a focus on non-financial reporting. Because of course, positive change does have two equally important objectives: to generate attractive investment returns and also to contribute towards a more sustainable and inclusive world. Now, it's relatively easy to measure investment performance, but how on earth do you measure whether a company is contributing towards a more sustainable and inclusive world? Well, we produce an impact report every year. We just published our most recent one 2 weeks ago, so it's available, openly available on our website if anyone is interested. And in the report, we report on impact really in two ways that I wanted to briefly outline today. The first is in terms of company impact. Now, this slide looks very busy because I've tried to put a lot of information on it, probably too much. But for every company in the portfolio, what we do is we aim to report on their impact using a logic model based on the theory of change. So for every company, we look at inputs, activities, outputs, outcomes, and impact. Now, the example I'm sharing with you today is an example from base of the pyramid. It's a bank based in Indonesia, Bank Rakyat. So when we're assessing the impact of Bank Rakyat, we look at the inputs in terms of R&D spend. What they actually do, well, they're providing affordable financial services to around about 144 million people. Well, what's the output of that? So you can see there the breakdown of the different types of financial products we offer. But what's the outcome of that? What does that mean for people? And it helps to build financial resilience and opens up opportunities for them. And then finally, we map to the UN Sustainable Development Goals, and we do this at underlying target level. So underpinning the 17 Sustainable Development Goals are 169 different targets. So you can see here that we map to 3 of the Sustainable Development Goals through 4 of the underlying targets. Now, a company's annual impact is important, but what is more critical is the long-term progress of a company. So we also look at the trend over time, which is the graph that you see in the bottom left-hand side, and that shows the number of microloan borrowers and micro savings account owners. And also, how does that link then into the company's revenue growth and ultimately share price return? So that's one way that we report on impact. The second way that I wanted to show you was at an aggregate portfolio level. Now, on the left-hand side are the UN Sustainable Development Goals that the portfolio currently maps to. And on the right-hand side is a kind of snapshot of all the different aggregated statistics pulled together. So in the top right of the wheel there, in the kind of turquoise colour, you will see that overall companies in the portfolio, including Bank Rakyat, have provided financial access to financial services to over 400 million people. Now, this is just trying to give an indication of the impact that companies are having within the portfolio. We work with KPMG, who provide assurance over our impact reporting, really to provide us with the confidence and our clients with the confidence that we are doing this as robustly as possible. And then, of course, we have to think about our additionality and the difference that Baillie Gifford can make to holding these companies. And we report on this through our Positive Conversations report. And here we report on aspects of companies' business practices, whether that's carbon footprint or attitude towards various social issues. But critically, we also report on our engagement activity. So how we have supported and challenged companies that we own within the portfolio, and also our proxy voting activity. And I didn't want to forget about investment returns altogether, because obviously they are critically important for our clients and yours. So here we have the performance of Positive Change since inception back in 2017. I think the main point I would draw out here is that in terms of looking over our investment horizon of 5 years, the companies that are really helping to drive investment performance are also the companies that have grown their impact over that time period. So, for example, companies such as Tesla, which of course has seen very strong share price appreciation as they've demonstrated that they can manufacture electric vehicles at scale. Dexcom, which I mentioned previously, has rapidly expanded its patient population and users of continuous glucose monitoring systems. Or Moderna, which is now a household name through the COVID vaccine. But of course, when we invested in it first back in 2018, was just a relatively young biotech company. which had yet to enjoy any commercial success. And of course, it's important to acknowledge that not everything works out. You'll see in grey there the companies that have detracted from performance, whether that's companies that we've subsequently sold out of, such as Beyond Meat, the plant-based protein company, or companies which we're still comfortable holding in the portfolio, like Coursera, the education platform. I'm conscious of time, and so I wanted to conclude my presentation today by not thinking about the uncertainties and the challenges, which is where we started, but by thinking about the solutions. And I wanted to maybe, before I have done a lot of talking, so I'd be really interested again in getting your thoughts and opinions in terms of, so if I could have the third poll up, Andrew, brilliant. In terms of what gives you most hope for the future? So when you're reading or watching, is it renewable energy? Is it our ability to remove carbon or capture carbon? Is it our advances in healthcare? Our ability to provide high quality digital education? Is it sustainable agriculture? Or is it our moves to electrify our transportation system? I'm hoping that you do get inspired by some of these technologies, so interested in there's an exact split between renewable energy and advances in healthcare in terms of the most popular choices. And I can really kind of sympathize and agree with that, because I think there are incredibly exciting moves in both areas happening. Certainly when we think about the energy transition, we realize we need to rapidly decarbonize the sources of our electricity generation and then electrify most of our energy. And so whether we're looking at alternative technologies, such as renewables or hydrogen or biofuel, I think we're very excited by the part that they could all play in the energy transition. In healthcare, I would agree that some of the innovations in healthcare are the ones that give me most cause for optimism, because new technologies are enabling a much better understanding of biology and diseases. Improvements are being made not just to the treatment of diseases, but also the prevention and diagnosis around diseases. And I think also we're seeing new business models which are helping to improve the efficiency and accessibility of healthcare. Within agriculture, I talked about what we're seeing with deer, but there are lots of other agricultural technologies that I think that can give us real cause for optimism. So whether that's alternative ways of farming, like vertical farming, we can see a picture of that in front of us just now, or thinking about alternative sources of protein, whether that's insect protein or plant-based, or also whether it's innovations that we're seeing in terms of seed technologies, which could allow us to increase yields without further increasing the amount of land that's dedicated to farming. So I think overall, although our world does face grave challenges, I think I do have real causes for optimism. And certainly the Positive Change team are really ambitious about facing these challenges head on by finding and investing in the companies that are really embracing innovation, really helping to drive change, and hopefully giving us all some cause for optimism for the future. I'll stop there, but I am so happy to take any questions that you have, and would really welcome discussion on any of the topics that I've touched on today.
Thanks so much for that, Rosie. I want to start off the questions by just drilling right down on performance. So a couple of listeners have asked about the level of performance over the last couple of years and how they can instill confidence in their clients about it.
Yeah, really happy to talk about that. So yes, looking back over the last, say, 3 years, you could say it's been a period of real extremes. Positive Change enjoyed exceptionally strong performance over years such as 2020 and the first half of 2021. And then 2022 was much weaker in terms of performance. Now, I can completely appreciate that for people invested in Positive Change, that is kind of very unsettling, because you're seeing a kind of tremendous growth in your investments and then a decrease in your investments. And I'm really happy to answer the question about how are we thinking about that in terms of the portfolio context. And there's a few areas. I think first and foremost, when the market environment changed, we really focused very strongly on the resiliency of companies in the portfolio. So yes, we're excited about the long-term prospects of these companies, their ability to grow and address challenges. But we wanted to make sure that these companies were in a good position to actually survive the short-term pressures that they were seeing, whether that was rising interest rates, rising costs around inputs. So we did a big piece of resiliency work across the whole portfolio, really asking ourselves, are these companies in a position to survive the short-term pressures that they're seeing and thrive over the long term? So we were looking at aspects such as their sensitivity to interest rates, their ability to exercise pricing power in an inflationary environment. And as a result of that work, a couple of companies left the portfolio. So I would point there to companies such as Beyond Meat, the plant-based protein company, and also Berkeley Lights, which was in our healthcare and quality of life theme, manufacturer of gene sequencing machines. So looking at the resiliency, and then also looking at the ability then of companies in their portfolios' continued operational progress, because we're growth investors. Fundamentally, we believe that revenue and earnings growth will drive future share price performance. And we were really encouraged that lots of the companies in the portfolio were displaying really strong operational progress. One of the weakest performers over the start of 2022, for example, was Mercado Libre, the Latin American e-commerce platform and business. Now, despite a very weak share price performance over that time period, it was growing the users of its e-commerce platform and growing the number of users of its fintech services. Now, subsequently, they've had really good results that's been recognized by the market, and they've seen really strong share price increases as a result of that. But it's difficult when you see kind of weaker share price despite strong operational progress. So resiliency work, focusing on the companies in the portfolio and their operational progress. And thirdly, it's that search for new ideas, because ultimately over our time horizon, that is how we're going to generate attractive investment returns for clients. So we've invested in companies such as Remitly, which I mentioned, Autodesk, US manufacturer of computer-aided design software, and Daikin, the Japanese manufacturer of air conditioning. So it's continuing to search for those good ideas. And we're seeing really attractive entry points in terms of valuation. So for example, we did look at Remitly at the point of their IPO, which was about 2 years ago now. I just felt it was quite richly valued. By the time we invested in December of last year, it had come off its IPO price by about 70%, so much more attractive entry price. So I think it's taking advantages of these short-term opportunities for long-term growth. Sorry, that was quite a long answer to your question, but I felt it was quite an important one, because clients need to have confidence that this approach can generate long-term attractive returns.
Definitely. Thank you so much for that, Rosie. Building on that, how do people who invest in positive change know that their capital is being invested in companies that are legitimately driving change versus those that are more just box ticking? So specifically, we've had a question on Duolingo and the fact that they host adverts for Temu, which is a Chinese fast fashion online mega shop.
Yeah, so I think that's a really good example of how we think about impact. We've got to think about impact holistically. So we're looking to invest in companies whose products are really meeting a challenge, and talked about how Duolingo's language learning is helping to enable people to learn a language for free. But then as part of our analysis, I did cover off kind of business practices. So thinking around, well, how do they actually run their business? And in terms of, for example, with Duolingo, when they're looking at what's their practices around the advertisers that they choose to work with. Now, they do have some policies and procedures around the advertisers they choose to work with, but they don't select them on an individual basis. So they have some policies, procedures, so that you shouldn't see kind of very harmful advertising, but there will be adverts in there, for example, for fast fashion, which of course has a negative environmental consequence. And we do have companies in the portfolio where you have to weigh up positive social benefits with negative environmental consequences. Bank Rakyat, which I mentioned in terms of our impact reporting, is another great example of that. So we like them because they're facilitating financial inclusion in Indonesia. But we do know that part of their loan book is attributed to palm oil plantations, which of course have a very negative environmental impact. So then you're trying to weigh up a positive social benefit with a negative environmental one. And so we speak to Bank Rakyat to understand how they approach lending to palm oil producers to satisfy ourselves that they're being as responsible as possible in that process. But ultimately, it comes down to a subjective view from us as investors to think, does this social benefit outweigh this environmental negative? And I guess the example of Duolingo hosting fast fashion adverts as just part of their advertising mix is another kind of case in point. So yeah, I think it's a great example. I'm glad it was brought up just to show that it's not simple. And we do have these positives and negatives to weigh up with every single company in the portfolio.
Thanks, Rosie. That's really helpful there to have that explanation. Someone has asked about when they match portfolios and funds to their client's level of risk. So where does risk sit for positive change? Who's the right sort of client for this?
Yeah, so I would say definitely for a client with a long-term time horizon. So the time horizon within positive change is 5 years. So I would say a client at least has to have that kind of long-term horizon. It will be volatile. It's a concentrated portfolio. It's got a very high tracking error and high active share. So if a client wishes to track the benchmark or kind of benchmark performance, this is absolutely not the portfolio for them. Having said that, we're very conscious of risk because we manage a concentrated portfolio. So we have risk parameters. We will always invest in a minimum of 6 countries, 6 sectors. We're far above that at the moment in terms of about 14 countries and 9 sectors. You'll notice these are not benchmark relative risk parameters, they're kind of absolute. And we work very closely with our investment risk team to ensure that, for example, there aren't any unintended stock level correlations within the portfolio. So we want this to have adequate diversification, but it it is concentrated, it is high conviction, and it will look very different to the benchmark.
So just to sort of finish things off quite briefly, could you outline what you think is the biggest challenge, but also the biggest opportunity for positive change heading into 2024?
Oh, biggest challenge, biggest opportunity. I think when we're thinking about the world, we were actually having this conversation just yesterday. Sometimes it can be very difficult to navigate what is best in the short term compared to what is best in the long term. And I'll give you the example we were talking about yesterday. Yesterday, we were talking about the ability to capture carbon emitted by factories and turn it into aviation fuel. And first of all, that is amazing that you could actually do that, to capture carbon, turn it into an aviation fuel. Surely that's answering a lot of kind of challenges. But then someone in the team said, oh no, but then aren't you locking in emitting behavior? Because then factories don't have any incentive to make their processes less emitting, because they would effectively be earning revenue from the carbon that they're emitting. It gives them that kind of permission to keep operating as they are, and you're locking in a kind of negative behavior. And I think it's that kind of juxtaposition of short-term versus long-term that makes this job fascinating, but also makes it has a kind of that kind of tension and challenge will continue to endure. But overall, it's innovations like that that do give us cause for optimism.
Fantastic. Well, I think that is a good place to end on, because we are getting closer to 2 o'clock. So thank you very much, Rosie, for your insights in our Q&A session. If your question didn't get answered or you need some more clarification, Rosie and the Baillie Gifford team will do their best to answer after the event.
Yeah.
Now, just before we wrap up, let's take a quick look once more at the learning objectives. I should assure you just one more time that your CPD will in fact be delivered tomorrow, so please do keep an eye out for that. And to wrap up, finally, let me just leave you with a teaser of what's to come from PA events through summer and into early autumn. So after a short break for what remains of this summer, Professional Advisor will be back on the road again for our autumn multi-asset roadshow. And you will find us in Harrogate on the 13th of September, in Knutsford on the 14th, in Cardiff, which is a new destination for us, on the 19th, in Bristol on the 20th, and finishing in London on the 21st. The keynote speaker on the roadshow is the Advisor Centre's Managing Director and Embark CIO, Peter Toogood. You'll also hear presentations from Brooks Macdonald, Downing, Invesco, and 2 more speakers to be announced shortly. The following week, we'll be back in Edinburgh on the 27th of September and in Glasgow on the 28th with our Scotland Investment Roadshow. The keynote speaker will again be Peter Toogood, and our sponsors are Downing, NS&I and Orbis. Finally, if you're within driving distance of Warrington, we'll be at the Park Royal Hotel and Conference Centre for our annual PA360 North Conference on the 4th of October. This is the largest management conference for financial advisors in the north of England and will feature presentations from over 30 speakers. The conference starts at 10 and finishes at 3:30 in order for you to be able to get away before the afternoon rush hour begins. So that is well worth a visit. All in all, those events are 12 hours of CPD for you, and you can find details of and register for all of the events I've just mentioned on the Professional Advisor website under the Events tab. So that is it for today's session. Thank you again so much to Rosie and to Baillie Gifford And thank you to all of you that have dialed in to listen over your lunchtime. I trust that you found this session helpful and worthwhile. And if you did, perhaps we will see you again next time. Goodbye.